All right. Hello, 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 and welcome. My name is Davon Reeves. I am the CEO and founder of Vestor, which is a crowdfunding platform for commercial real estate. And we are here to welcome our latest deal on the platform. It is a Marriott hotel development project in North Carolina. And we have Avery Washington, John Hunter, and Ricky Ward. Did I leave anybody out? Did I get everybody from your team who's on the call?
We've got two more folks.
Who? I don't want to leave anybody out.
We've got Latoya Owens and Bernard McLeod.
Okay, Latoya Owens. Okay. Latoya Owens. Oh, okay. And McLeod. So welcome, welcome, welcome. And so for those who don't know what Vestor is, again, we are a crowdfunding platform or a crowdfunding portal where you can invest in commercial real estate, including hotels. And we have so far been the go-to when it comes to investing in hotel investment opportunities. So how that process works, you go on the website, vestor.com. Everybody will get a replay of this and also be listed on the website where you actually go in. The pitch deck will be there for you to review, as well as the subscription agreements or offering agreements for you to review. So that way, if you need to share with your, attorney, your CPA, your financial advisor, definitely feel free to share that information. So that way you can get familiar. Avery and his team, they're going to share more information about the deal. So I'm going to be quiet because that's why y'all here. You're not here to hear me. You're actually here from them because you want to hear about this hotel development investment opportunity. I just want to let you all know that people have been asking me like crazy since the last deal. We just had a recent deal that just closed last month. And they're like, okay, Devon, we need a deal. And I was like, okay, give me a minute. So we got one. So here we are, hotel development opportunity in North Carolina. So I'm going to be quiet. I'm going to pass it over to the Richland team. And, feel free, Avery, I don't know if you want to go and introduce yourself and have everybody introduce yourself, and feel free to share your screen.
Awesome. Thank you. I'm going to pull up the screen real quick and then we'll jump into some intros. Can everyone see the screen?
Yes.
Perfect. Okay. So I'm Avery Washington. I'm one of the managers of 133 Kuntz Fork LLC out of Richland, North Carolina. And we're here to speak with you all this evening about us developing a 79 key Fairfield Inn by Marriott in Richlands, North Carolina. My background is I'm a licensed broker. I've been focused on residential through mixed use development since 2021. I started investing in 2013. I'm currently involved from 2021 through present in the creation of roughly 500 units of housing throughout central through eastern North Carolina. I'm going to pass it on to John Hunter to introduce himself.
All right, thanks, Avery. Hello, everybody. My name is John Hunter. My background is I'm a 24-year Marine Mustang veteran officer, which I'm proud of. Also, a car wash operator. I own and operate 7 car washes. I have about $7 million assets under management with the projects I have. My most recent development is a project, one of the first few Wawas in North Carolina. I did a co-development for that, which is under construction currently. And I am one of the partners of this Marriott hotel. I'm looking forward to working with you all.
Ricky.
Hey, everybody. My name is Ricky Ward. I'm a local builder from Richland, North Carolina. hold an unlimited GC license. We've been doing development work for the past 25 plus years. Have several projects right now going on, 300 plus homes in Richlands. Working in 2 different states. Started a subdivision in Indiana as well. Done some commercial. This will be our first hotel deal. But I'm really excited about it because it's in my hometown of Richland, North Carolina, where I was raised. And it's really exciting to see what's happening there. It's taken off, and I think it's going to be a really good deal for the community, not just for Richland, but some community for Jacksonville as well. But have extensive relationships throughout the city and county with city officials and inspectors. So I think we really got a good head start on what we're doing, and I'm just looking forward to it. Thank you.
Latoya, you want to jump in?
Yes, hello everybody. My name is Latoya Owens and I am a broker here in North Carolina. I just began my development journey and I'm working on building my portfolio. I'm also involved in the Coons Fork Road endeavor. I'm excited about it. I have a passion for this community and I'm excited to see it grow and to have a hand in that.
And then lastly, we've got our fifth man that likes to play the background, Bernard McLeod. It's just going to have his name on screen, but if you could introduce yourself really quick.
Absolutely. My name is Bernard McLeod. Thanks everybody for joining. I am a real estate developer, both residential and commercial. I have several residential developments across North Carolina. I have several commercial developments going around across North Carolina. One of my clients is Waffle House, which we just completed one in Richlands, North Carolina, very close to the site. Another client is Wawa, which will have another one or two in Onslow County. I also deal with rural farms on the commercial side. So I'm just happy y'all are here to work with 133 Coons Fork LLC, and we're happy to.
Perfect. Thank you. All right. So naturally, we have to start with the disclaimer, just laying out every investment involves risk. Making an investment decision, don't want to put any capital at risk that you can't afford to lose. However, what I would say is that we've worked with Vestor and hotel manager and lenders in order to underwrite this to ensure that everything that we're discussing today is as conservative an analysis as possible, that we're confident that we can not only deliver on, but exceed. So John mentioned he was in the military. I did not mention I was in the Marines also. So for those of you who are veterans, you may be a little tickled by this because it may remind you of something called a concept of operations. I am of the frame of mind, if it's good enough for doing things with life and death consequences, it's good enough for making some money. So this deck may look an awful lot like a mission brief. But the bottom line up front, so the town of Richlands is the only location within about a 50-mile radius of Jacksonville, North Carolina, and Camp Lejeune, which is the home of the 2nd Marine Expeditionary Force, where there's a major airport in that radius. The next closest is Wilmington, North Carolina, little over an hour away to the south. And then to the north is New Bern, North Carolina, and that's a significantly smaller airport. This location, its proximity is convenient to the Albert J. Ellis Airport. They're expanding flight options. They currently have contracts awarded to expand the runway to accommodate larger aircraft. And most importantly, it cuts the commute from the airport to the nearest flag hotel in half. And you'll see some of the significance of that as well when we get into looking at the site itself. And then our goal is to develop ground up a 79-key branded hotel in Richlands. So we introduced ourselves, the folks on the bottom, and then at the top we've got the hotel management group that we're going to be working with. We already have a signed management agreement in place. And then we have the general contractor that we're going to be utilizing. They're based out of Charlotte, North Carolina, and they also have experience doing similar types of assets and specifically hotels. And then I'm going to call you up one more time, Bernard. Can you speak a little bit more to what Newport Hospitality does best in their performance in some of their hotels in the adjacent Fayetteville market?
Absolutely. So we picked Newport Hospitality based off a couple traits. One, they're a preferred management company with Marriott and Hilton brand. Newport Hospitality manages around 50 hotels throughout the eastern part of America. But the main reason we went with them, they manage and operate and own the number one Fairfield in the Marriott brand, which is located in Fayetteville, North Carolina. And we expect to use their same team that they have achieved that great success with at our hotel.
Thank you. All right. So this will be occurring in essentially 4 phases. Currently, we're in the second phase. We're working through civil engineering. We've gotten a number of those things done, surveying, subdividing, geotechnical reports, getting municipal approval for building a hotel on site, variations for the height of the hotel to deviate from what the standard height requirement is within the zoning ordinance, among other things. We're still operating along this timeline. There may be some give or take in the July 25 timeframe, depending on closing out financing, but we're still on this trajectory, more or less. And then the exciting part, where is this thing actually? Right? So I like to start with the big picture. If you can see at the bottom, just off the center to the left of that text box, you've got Albert J. Ellis marked over there. And then you can see with the star in the center, obviously, is where the hotel site is going to be located. The next closest flag hotels are in Jacksonville, North Carolina, which is roughly 25 to 30 minutes, I'd say southeast of this location. So it significantly cuts down the time from the airport to this location. And then here, the site itself. So I'm going to start on the left side. So the site itself is marked by the star outlined in red. And you can see the emblems from some of these nationally recognized franchises or chains. So that Starbucks now is built and open and operating. Also, directly next to the site, let's say to the left of where you see that Navy Federal emblem, there is a Waffle House that is already built and is currently going through interior upfit at this point. I've never seen anything built so fast in my life. It's actually pretty impressive. If you ever have the chance to see it, don't blink. And then you have these other regional, national franchises in the immediate vicinity, which also poses an opportunity for reservations, bookings, because folks will need to come out from corporate to check on these franchises, and this will probably be the ideal place to stay. And what you see in orange over to the right of this image is one of 4 major residential or mixed-use developments that are currently planned or underway within the town of Richlands. There are well over 1,000 home sites that are in some phase of civil engineering or permitting or approaching civil construction phase. So the timing of this will also eventually lend toward a location that's ideal for contractors coming in the area to build out communities as well. To the right, we've got the layout for the hotel. We're planning to have a restaurant in front of it, a sit-down restaurant. And that's going to allow us 2 things. One, it's going to allow the hotel to focus on, keep the main things the main thing, and not need to worry about serving food or getting into serving alcohol. You can have something convenient, walking distance right there, and then they can just go back to the room. and they can focus on operating the hotel as excellent as possible. So we're going to get into the pro forma, the financials, and this is just to say these are projections, but they are based on very conservative analysis that's factored in a number of things, including the performance of hotels in the surrounding area. So the offerings themselves, there are two offerings, essentially two different classes of shares. So there's one class of shares available at 20,000 with an 8% annual return, and there's another class of shares at 40,000 with a 10% annual return. And then I try to keep it simple as possible. We don't need some whiz bang Excel formula. This is how we will be calculating what is owed to you, worst case scenario. That is the goal. Obviously, hotels make money every day, though. So, in addition to that minimum target rate of return, our intent is to be distributing revenue to the investors or the shareholders, actually, because this is an opportunity to purchase equity or shares in the entity which will own the site. And obviously, that would come with all the benefits of owning real estate as long as you meet whatever criteria your accountant tells you need to meet, whether that's being a real estate professional or the like. The top chart is a breakdown of what the split will look like between general partners and limited partners, which is what we'd refer to the investors. It's always to the benefit of the investors as we start lower and then scale higher, an incentive for us to have to bring it and exceed our initial targets. So the DSCR stands for debt service coverage ratio, and that's just to say if the monthly mortgage was $1,000, at the point the hotel has made $1,250, every dollar after that is going to have a split between the general partners and the limited partners. And then this will work just like tax brackets work. So it's not just going to slide to our benefit the higher it goes. It'll be to say that, dollar 1,251 through dollar 1,499 is at the 80-20 split, and then dollar 1,500 through dollar 1,749 is at the 70-30 split. It will function just like that. This lower chart is referencing the split along target sale prices. Now, our optimal target sale price is going to be the max we can get. So we're going to cross our fingers that whoever is over the Federal Reserve by the time we're selling this thing really thinks low rates is what's best for everybody. That's going to obviously help us achieve the highest price in addition to operating the hotel, running at full steam, really leaning on expenses and generating as much revenue as it can manage to. But that's also going to function the same way as explained regarding how tax rates work with that elevation and change in splits. So always to the benefit of the limited partners. This is a snapshot of the pro forma. This was actually compiled by the hotel management company, by Newport Hospitality Group. So this is obviously based on their experience observing these get done, being aware of cost of capital construction timelines that they're observing currently and with other clients that they're working with. We think that on the high end, this will end up having a cost of roughly $110,500 per room. But we've already discussed with Hendricks that they are confident they can actually bring us about 10% lower than that cost. But there's one way to find out. So we're going to hope for the best and prepare for the worst and go off of these numbers. And that's what all the projections and the offered return is based on. It's based on these numbers. Similarly, this is a screenshot of the conservatively anticipated performance showing the debt service coverage ratio. The reason for that bump in year one, where it has 1.77, is because we'll be getting something called key money in year one. and that is essentially going to allocate a specific amount per room back to us once the hotel is open and operating. And then the lowest number you see is our target sale price for the hotel. Our goal is to exit the hotel, in roughly 48 months. We essentially want to ramp this up to it's stabilized, running at full steam. All the major systems are well within their lifespan, and you're years away from having to do a property improvement plan so that this can appeal to somebody who's out there looking for a turnkey asset. And then this is my contact information, John's contact information. If anybody has any questions, I love a good sanity check and the opportunity to demonstrate I'm not just making this up. So feel free. And that is it. I'm looking forward to answering any questions that you all have.
Avery,
Yes.
this is James Harrison in Houston.
How are you, James?
Doing great. Thank you for that presentation. I was wondering if the hotel was planning to have breakfast, complimentary breakfast.
Yes, that is standard with that product. So yes, I'm all about that breakfast included with the room.
Okay,
I didn't forget that one.
thank you. I thought about that when you were talking about the restaurant across the street.
Mm-hmm.
And so thank you for clearing that up.
Absolutely. So just to give you a little more context, so ironically, so we toured a Fairfield Inn that they have in Fayetteville, that Newport Hospitality manages in Fayetteville. And when we walked in the lobby, the first thing I did was try to look to see where they serve breakfast. That is my favorite thing in a hotel. Separate from that, though, the restaurants in the vicinity, the benefit of it is to attract the air crews to do room blocks with us. It'll already be a no-brainer that we're cutting their commute by so much for those last flights in and out. But one of their requirements is they want a sit-down restaurant. So we're going to be working on attracting we'll say something like a neighborhood Chili's or the like, something that you can no kidding get a wide range of meal options in case the Waffle House doesn't do it for them. But we just want to make it so that getting them to come over there and put a contract in place for a room block is just a no-brainer. That's a part of that goal.
Great, thank you.
Avery, we have a few questions coming in, and so I'm going to just kind of read through some of them. This one's from
I'll
Jackson.
share my screen again and go to that timeline screen also for you.
Okay. So the first one is, what made this market the right fit? I live in the area, so interested to see how this coming to that particular spot. You want to answer that one?
So one thing that made this market a perfect fit was the expansion of LSJ Airport and the need for a better product in the area. The closest hotel to the airport is about 32-minute drive, and the airport traffic that we're generating is much higher than previously expected. Also, the growth of the area is just tremendous. So Richlands and Jacksonville will be connected. And once we did our feasibility study, we actually had all of the brands wanting to be a part of this, from Hilton to Marriott to Wyndham. And so we just went with what brand we felt was best. But our market is ripe for a new hotel.
All right. Thanks, Bernard. So our next question was, and I can kind of answer, this was from Terrence Brown, given the timeline risk, given the price and availability of materials, pressure on the current environment. Terrence, yeah, we're watching that too. One of the things we've been looking at is potentially building, making a hotel build a modular build versus on-site. We toured a local factory that can essentially build a hotel in the factory. Anytime you build anything in a factory, you have the availability to control your costs. So for example, we all know about the deportations, all this stuff. There's less people working on houses. It's going to drive construction costs up. trade war, all this stuff that's going on. So when you build inside of a factory, your dollars per square foot goes down by a lot. And actually, the quality of construction goes up because everything's inside a controlled environment. Say, for example, like we toured a factory and they have a house that's maybe, they were building a house, I think maybe around 1,500 square feet. And after that house is completed, they only had $80 of waste after the house was built. And so one thing we can, specific to that when it comes to the houses is a lot of houses are built by 2x4s, exterior walls. These houses are built by 2x6s. So that's kind of one of the things that we've been potentially looking at to make sure that we try to stay within budget. Marriott also offers incentives for modular builds. I think Bernard may be able to speak on, I think it's a hotel in Chapel Hill that was built, essentially, and we talk about modular, essentially you would be able to bring each room in on the truck. So it's almost like you're putting the hotel together with Legos. If we were to go that route, that potentially cuts our timeline down probably, I would say, in half by going that route, because they would just essentially bring the rooms in and we put it on the truck. And I think about a week later, the hotel's up and running. A week or two later, the hotel's up and running. Bernard, do you want to speak on that? Or which hotel? I think it was
The name of the hotel is the AC Marriott in downtown Chapel Hill, North Carolina.
Yep. So if you guys want to Google that hotel, that's an example of that and that we've been considering. Does that answer your question, Mr. Brown?
Yes, it does. Thank you.
Okay. The next is minimum investment. Did you address that already, Avery? I thought you pulled up the slide. I think it was minimum investment is $20,000.
Sure, I'll go to that.
Yeah. That was from Ms. Chan.
All right, so the minimum investment is $20,000, and that is for one type of share. And then the other option is $40,000. And each of those share classes have a different annual rate of return or target rate of return.
Yeah. Next is Asia Roberts asking about when will the bill be completed. If we do it, I think from the ground up, it's usually about a 9 to 12 month construction. That's building it on site. If it is built modularly, that timeline will be cut down by a lot. So once we get fully funded, within 9 to 12 months from being fully funded. Will this location have a meeting space along with a pool?
There will not be a pool. They cost a lot of money to build and to have insurance on and to operate.
Yeah.
And unfortunately, they're not really as much of a draw as you would hope. It is awesome when you have kids that want to get into it, but otherwise it doesn't really generate any revenue. So one, I don't think the site is going to accommodate it space-wise, but we've definitely been recommended to steer clear of it.
Okay.
And then the meeting space, there is going to be there won't be any, we'll say, salons or conference rooms that get rented out as you start to see in some of the limited service hotel brands. There will be an area potentially for the air crew that we just need to make a couple arrangements for, but because that's one of the things that they require if they're going to put a contract in place to block off a number of rooms in that hotel.
Cool. All right. Next question. Latoya answered about proximity to airport. Cynthia Miller asked, is the real estate or land under contract or already purchased? We currently own the land.
I'll speak a little bit further to that.
Sure.
So Ricky Ward currently owns the site, and the group is going to purchase the site from Ricky. He's agreed to sell it for well below appraised value. So we have a contract in place with Ricky to purchase it as a part of our financing closing out to proceed with vertical construction. The site's already cleared. It's already, say, level, what we refer to as on grade. And there's also already a stormwater pond. So some of the things that would delay the timeline and increase the cost to build are already done. And we're expecting to have significant equity in the site. And that's also going to reduce the amount of money that needs to be raised and brought out of pocket in order to close the financing as well.
Thank you, sir. Kendall Lockett, do you have to be an accredited investor to be part of this deal?
You don't have to be an accredited investor, specifically because it's a Reg CF raise, so you don't have to be accredited and you're allowed to market it. However, there are stipulations regarding income or net worth for how much you are allowed to invest in investment opportunities or private placement opportunities. That's the one thing I don't know the formula off the top of my head. You do not have to be accredited though.
No, sorry. It's okay if I jump in?
Please.
So the formula is if you make less than, so if you're a non-accredited investor, for those who are non-accredited investors, it's if you make less than 200,000 per year, then you'll be considered a non-accredited investor, have a net worth of less than $1 million, excluding your primary residence. And so how that works would be that 5% of your total income, if it's more than 120,000, then it's whichever is greater. So if you're like, I don't know, 180,000, then it all depends on how much you make and your net worth. So it takes a percentage of whatever is greater. So if your net worth is greater, like, I don't know, 900,000 or whatever, then they'll take a percentage off it. So the percentage is 5%.
Okay.
And when you invest on Vestor, we calculate it for you. So we'll let you know. So it's not like you got to figure out and pull out a calculator and do math in your head.
Thank you.
All right. Thank you for that. From Karen McAfee, what is the target room rate? Ideally, what happens upon exit when we get out of the investment back? Plus, what is the total amount we are seeking to raise?
So target room rate, what was the second one?
What is the total amount we are seeking to raise?
Certainly. So the total amount we're seeking to raise is 2.6 million. We won't complain if you want to pile in a little more to 2.75 million. As far as the room rate, I would have to open up the pro forma done. I don't remember it off the top of my head. Plus, to be honest, it is a little bit of a moving target because not unlike, other platforms that make renting things more accessible, you're always factoring in local events, the season where there's more demand, what other venues have their rates set to. So there's some fluctuation that occurs to that just in general. So I'd have to get back to you with that.
The hotel management group, they're good about managing that. The goal is to maximize as much as the location can demand and keep our occupancy up. We don't want to be overpriced, but we want to maximize the investment by trying to charge as much as we can.
And then they also have a plan to ramp up rates as the hotel grows more established and the amount of booking stabilizes over time as well. There were like 3 questions in that. Did we hit all of them?
I think we did. You answered the total amount.
Okay.
Ms. McAfee asked about the room rate. Did that clarify, Ms. McAfee?
Yes, that answers the question. Thank you.
Okay. All
Thank
right.
you.
Good. Okay. Ms. Simmons, we answered yours. It's about 3 minutes down from the Walmart, not too far. Kenyatta Taylor, will there be king suites, queen suites, or standard rooms only?
All of them.
All of them.
All of the manager's definitely gonna help determine an optimal mix, but there will be all of the above. Absolutely.
Okay, Mr. Davenport said, is one required to have an LLC company in order to invest in this hotel?
No.
Okay,
Terrence Brown had a question above. I'm not sure if that one was answered. What are the construction timeline risks given the pricing and availability of materials, pressure, and the current environment?
For sure. So it's funny, I spoke to someone about this today. So the biggest risk, obviously, is that the cost of materials just spirals out of control. That is the biggest risk. And that occurs before we get to certain key points in the construction timeline. The biggest way that we can mitigate that is by continuing to dig into the modular build approach, because we can benefit from that because they're already making mass purchases of materials at scale. The great thing about walking through this factory is we got to see, I just thought modular homes were basically mobile homes, but put together on site. And it is literally not only the same as your standard wood frame home, but in my opinion, more ruggedly constructed because they need it to make it in one piece getting transported to another site. So it would be put together essentially room by room. That would collapse the timeline, reduce our hold costs, and give us the benefit of essentially riding on their coattails with them purchasing materials at scale for all the other products that they are manufacturing. So it wouldn't just be us trying to get a hotel's worth of materials. We'd be riding on the back of this modular home builder as well. So that's our way to mitigate it if it looks like things are getting a little crazy.
yeah. One answer to, I'm gonna jump down to Miss Matsy, hope I don't butcher it, Kumbila, about said North Carolina, it is a hurricane area, but just like Avery said, modular homes are built to state code. So state code exceeds your local code, meaning that the state code is the highest code that you can get. You have state code, you got HUD code, you have a bunch of other codes, but state code is a requirement that is built to the highest standard. I hope that answers your question.
And also, like Avery, I just want to hop in there. Avery alluded to modular and manufactured homes. Those are two different things. So, yeah.
Yep.
Okay.
So to speak a little bit more to it, because totally valid concern. So when we were able to see these getting put together, and this is why I say I actually think the construction's more rugged than your standard wood frame construction. All of the decking, those wood planks that would go under the floor, normally we've seen those sheets of plywood, they're getting nailed down. So the ones that they're using to build these are actually thicker than the standard plywood sheets that I've seen in most wood frame construction. And the edges are tongue and groove. So they're essentially locking into place. And they're not only getting nailed down or screwed down, they're also getting glued down so that they don't get unseated over time. They also have the same process for the drywall as well. They're not just screwing in the drywall, it's also getting glued at all of the seams where it's hitting the framing, the framing. Additionally, the framing, also the traditional 16 on center framing that you would see in any house as well. And then all of the drywall, things of that nature are all getting done on site. And then they have other precautions to make it durable enough to travel hours to whatever the installation location is going to be. So these are really rugged structures, but totally understand the concern.
Yep. Okay. Thank you for that. Mr. Burnell Goldman, Burnell Goldman.
You said it right.
Okay, it had it on there twice. I was like, what is this like a anyway? So while I understand there are currently no other hotels within 15 miles, I want to inquire whether there's any new hotel developments in the pipeline within that area. Additionally, do you happen to know the distance to the nearest Newport Hospitality managed property from this location? Two good questions. So one of them is we own the rights that the territory. So from a Marriott perspective, no other Marriott can be built within that area. The second question was the nearest Newport Hospitality Group managed property from this location. Is that Fayetteville?
It's the Fayetteville
Bernard?
site.
Yeah, the Fayetteville site. Fayetteville is about two hours from Jacksonville. It's near Fort Bragg now. And that is one of the top performing Fairfield Inns within the group. Dr. Kevin McAllister, can you confirm if this is a base Fairfield Inn or Fairfield Inn and Suites? Will the development team or the management team work to secure contracts from the various industries in the area? We'll just do that first.
Sure. So, to answer the last question first, short answer is yes. So the hotel manager, essentially in the 6 months ramping up to opening, or wrapping up the back half of construction, they're starting to get on the ground, hire staff, train staff, interface with the local organizations, businesses, and whoever may have a need for using the hotel. They're going to be going out to get contracts and get agreements in place with them. That is literally a part of our management agreement with them and their scope of responsibilities. And then what was the first one?
So one of the first ones was, will the development team or management team work to secure? Oh, the next one was, does the land size have expansion for a complementary hotel such as a Courtyard, which is oftentimes paired with this Fairfield brand?
That site, no. The one that asked about the management team and the contracts, there was like a question right before that.
Oh yeah, I'm sorry. That was, so we wanted to know if it was a base Fairfield Inn and Suites. This Fairfield Inn is their newest prototype that they currently have.
It's not going to be all suites though, if that's what you're asking. But it is their newest prototype that will have a mix.
Yeah, so I was just clarifying, apologies. So I was just asking, was this a base fair? So I'm an ambassador member with Marriott, so I know the brand well. So I was asking if this was just a base Fairfield Inn with just standard rooms, or if this would be a Fairfield Inn and Suites that has some type of mix of standard rooms and suites.
Yes, mix of standard rooms and suites.
All right.
All right. Timothy Davenport, if one becomes a partial owner in this hotel, is there a requirement for them to have to visit North Carolina periodically to assist in any type of management requirements?
Oh no, there is not.
Nope. No to the no, no, no.
But you're welcome to visit.
Yeah.
Well, thanks. That's great. That's good to know.
No problem. We are not going to put you to work.
Okay.
Busy a lot. Well, I'm a system engineer, so I don't really have time to travel and stuff, except for vacation. And just want to make sure I wouldn't be put into like one of those type of requirements. Like if you invest in something, then there's a time requirement. So good to know there's not.
No,
no.
we wouldn't do that to you.
No.
Okay. Cynthia Miller, is the property being built with public sewer septic? Ms. Miller, it's all public sewer, no septic. Burnell Goldman, is there a certain amount that has to be invested in order to maintain Marriott owner travel benefits?
No.
Ms. Chan, how many parking spaces? 79.
Oh, yeah.
79.
That's a great question.
Yeah.
79 dedicated spaces.
There you go.
Yeah.
Yeah. All right, Dr. Kevin McAllister, how are the commercial incentives offered by the municipal area being factored back to investors? Is this a direct deal with Marriott or through collaboration with NavHood?
This is directly with Marriott to answer one question. And the municipality currently isn't offering anything. However, if that does occur, then what it's going to allow us to do is to just to find a way to disperse it back to the investors or to shorten whatever the criteria was or get to that criteria for, say, a distribution faster, right? So let's say if they cut us some tax break, gave us a grant, something of that nature that we could factor in wherever appropriate, we'd find a way to shorten the distance between what would garner hitting a distribution payout for the investors. We always want to err on the side of helping spreading it around to the folks that help us go from 0 to 1 and vice versa. It only makes sense to do that.
All right. Karen McAfee, so the projections were hard to read in passing. What type of income is this investment generating? Ordinary income and capital gains in roughly 48 months. What is the expected ROI on an investment?
So as far as the investors are concerned, our minimum target return for the respective shares are either 8% annual return or 10% annual return. Beyond that, it's difficult for me to really say what it's going to be. That's a part of the reason for that criteria for the distributions, because I want to make sure that I clearly lay out so that anyone at some point, if they said like, hey, what's going on here? And then they could get the financials and say, oh, they did say once we hit this debt service coverage ratio, they did say with this sale price, this is how the splits are going to be. And then they can do the simple math laid out. But beyond offering that target return and showing you the formula, it can be challenging for me to give you an honest, like real number beyond that point. So I try to stay within those guardrails so everybody's got the answers to the test, so to speak. And then that's regarding the true return question. What was the other one though that wasn't about return?
So ordinary income and capital gains roughly 48 months. So you may want to go to that slide. Slide where it had the just the 4-year
Charts.
conservative projections. Yeah. Ms. McAfee, we have the full projections in the data room. That's on this offering as well, on this listing. So you'll be able to see the whole thing.
Mm-hmm. Yeah, there's going to be like the full pro forma where you can go through all the tabs. You can dig through everything. I just try to create a small book to go through when we do the presentation, but you can fully go through all of the data this is pulled from.
Okay. ST, what are the Marriott owner benefits for participating in this project?
I don't have the ability to offer any Marriott owner benefits. So if there are some we can pass along, I'll have to talk to Newport about that or the Marriott rep itself. Bernard, do you know if there are any that we have the ability to pass along?
We have the ability to add them to our friends and family rate as they travel. And think we can pass along our discounts on rental cars as well.
Sick. Okay.
All right. Natasha Morgan, what's the investment amount per share? And yes, your answer about the recording be posted, but the best amount per share.
I have to look at the paperwork because I'll have to look because I'm only familiar with the minimum, the attorney has like a number of shares they create, but then there's a minimum purchase of shares. I don't remember what those two numbers are. I just recall the minimum. But that will be outlined in the, man, what is the name of that form? I want to, it's not the private placement memorandum, is it? The operating agreement or the subscription agreement is where that would be outlined, the
Yes.
breakdown of shares
Yeah,
per
sure.
minimum investment.
Right. And that's on the within the data room.
Correct. And then to correct something actually on here, a mistake I made. So this here, where next to the dollar amount, it says 0.25% shares. That is inaccurate. That's actually like equity percentage of ownership in the hotel, not a percentage of a share. You would own a 0.5% of the hotel at a 40,000 minimum investment, or a 0.25% of the hotel at that. I don't remember the share breakdown, honestly, because that's a number attorneys often just like tell you what it's supposed to be, and it isn't particularly relevant to what you're doing, if that makes sense.
Thank you. Kendall Lockett, I did skip over you. I apologize. When do you anticipate the first payout to limited partners? Will we have to wait a year after opening?
A year after opening? No. 6 months after opening, yes. And let's say everything's onboarded and we're ready to start turning dirt in July. That would put us to roughly December of 26, say last quarter of 2026, first quarter of 2027 for the first distribution potentially.
That's all the questions I have. Are there any more questions? These are all great questions.
I'm just scrolling back up because I think there was one that I'm not sure was answered, and I apologize, Avery, if it was.
Oh, no worries.
Ms. Chan said she wants to know our areas of expertise.
Sure. All right. I would say that my area of expertise or background with regard to this is in putting together decks, dealing with securities attorneys, SEC broker dealers. I seem to be comfortable speaking in public. I've raised money a few times as well, so I'd say some of the underwriting or analysis is another part of it in determining what's an appropriate offering, essentially.
And I would say my area of expertise is really more so on the construction side, from dealing with some of my projects. I own 7 car washes, and car washes and gas stations are pretty difficult bills, because you're dealing with a lot of high voltage, a lot of pipe management and water pipe management. So that would kind of be my background. A 24-year Marine officer, been on the enlisted side and the offshore side. So people management, project management. So yeah.
Oh, and then I would like to chime in and say that I think my area of expertise is just public relations. Definitely networking. I always tend to put the right people together for the right things to happen, i.e., this team. We all met really in a unique way. And I would say I played an integral part in that. And then also, coming from my real estate background, just being able to know what's happening in the area, being immersed in I like to consider myself the chief economist of the area because I know the numbers, how things are working, and that is my area of expertise.
My expertise is development, commercial development, and real estate. Pertaining to this particular project, I'm the spokesperson that speaks to Marriott, all of their representatives, and make sure that everything's flowing well on the backside. I handle the FF&E, the conversations with Marriott, the franchise agreements. So I make sure everything's good on the back end with the Marriott process.
And also to piggyback on that, my role in this endeavor as well is the FF&E, working closely with Bernard to get that going.
Can you explain what FF&E is for everybody really quick?
Absolutely. FF&E is furniture, fixtures, and equipment. So it's all the items that you see when you first walk into the hotel and all of the items that you see in your room, including your bed, your dressers, and all of those items, what type of flooring that you have, what type of wallpaper you see on the wall. Those are all items that we call FF&E.
Thanks. Ricky, we didn't forget about you. What's your role? You out there?
We can't hear you. No audio.
While you're waiting on him, I do have another question, please, Kevin McAllister.
Please.
In your agreement with the management company, I know that are there performance metrics or key performance indicators? I know that many times Marriott has a very high standard and some properties sometimes have issues with losing their flag. Are there stipulations or any guardrails for the management company should this become an issue?
Short answer is yes. Man, I don't know if you can speak to this anymore, Bernard. I remember I would have to go back and review it to say it, like explicitly repeat what it is. But I remember going over a color coding system essentially regarding the performance of the hotel, and then checks conducted by the franchise specifically, where it either maintains that color code or gets downgraded. And there's a condition where if a certain color code occurs more than once over a period of time, I just can't remember it like verbatim off the top of my head. Any chance you remember it, Bernard?
So the color code is red, yellow, and green. You want to stay in the green. Newport Hospitality is recommended by Marriott. They don't have any hotels that's in the what we call the area of red area at the moment. I think they've been with about 2 years without having any issues with their hotels. They run a tight ship, and they only agree to do hotels that they fit in their criteria. When you're reaching out to management companies and even the brands, you have to show them a great pro forma, and they have to believe that this hotel will fit their criteria. So Newport actually believes that this hotel fits their criteria and far exceeds that. So we don't believe we'll have any issues staying in the green with this project.
And I want to say when we negotiated the management agreement, one of the things that we pushed back on that we wanted to ensure was included is there are certain minimum amounts that we have to ensure are kept in accounts as the hotel is approaching opening and operating. And one of the things that we negotiated was if the general partners essentially are getting cash called to maintain the balance in this account, then you are not performing, and that would be the basis for terminating the agreement. I remember that is one of the things we explicitly discussed to try to give you a little more context. Did I answer your question?
Mostly.
Fair enough. The management agreement is a document you can review also in the data room, though. So you'll be able to pour over that too and see everything. You'll be able to see everything that we have on hand, literally.
Okay, next question, Karen McAfee. What is the commitment so far for limited partners, and when do we anticipate closing out this funding phase?
So we are just starting to onboard capital. Ideally, we'll be closing it out within roughly 60 to 75 days, but we do have some runway if that's needed for continuing to raise. But we would love to get this capital raising knocked out within a roughly 2.5 month time frame. As far as the capital contributions from the group itself, that amount is roughly $220,000 in out-of-pocket, like cash contributions coming from the general partners, and that's not including what we anticipate being up to $800,000 of equity in the site based on the agreed sale price as well.
Great,
Okay.
thank you.
Mm-hmm.
All right, Burnell Goldman, we just answered yours regarding the deadline. Who would be handling the finances? Ms. Chan, do you mean when we are you talking about the wiring of money or the closings? Is that what you mean? You on? I don't know if she's on anymore.
I'll try to cover the gambit and see if I miss it, then just let me know. So as far as at this point, say the flow of investment to us, you would create a profile on Investor, you would invest through them. Once we hit our minimum target amount, at that point, the capital raise can be released to us from escrow. So that would be the way it flows to us. As far as the operation of the hotel itself, that would be something that's getting dispersed from the hotel manager. They would be tracking the revenue, keeping it on the appropriate documents, creating financials. And that's something that we would have the ability to share amongst the group, provide, give updates on. As far as the distributions, that would be coming from us getting dispersed out to the investors. And as far as the accounting, once the money comes from the hotel and gets dispersed, we'd be working with a local accountant to make sure that we're doing everything in line with generally accepted accounting principles.
That's all the questions we got. Any other questions?
I think that was it.
Nice. Best presentation ever.
Yes, thank you all. So how it will work, Avery pretty much explained it, but everyone will receive a, oh, someone sent the question to you, Avery. I think it was sent to you privately.
Oh,
It said
okay.
the question was sent to you. But everyone will receive a replay. I know I've been getting questions about will a replay be sent out? Yes, a replay will be sent out. The link should be up for folks to invest pretty soon. And how it will work, you'll create a profile. It's free to create a profile, and you invest. You can do wire, or you can use an ACH. You can't use a credit card. And then how it works, the money will be sent into an escrow account. We don't touch it. The Richland team, they don't touch it either until the deal closes. So when it closes, then it'll go over to them. And once that, so you'll be in communication with us, Vestor, handle the communication process. And once it's complete and they have their successful raise, then you'll be in complete communication with the Richland team. Oh, it's another question. It says, how long? I don't know if y'all saw, it says, how long is your Marriott territory rights extend for? Is it at least 48 months?
Oh, do you know this, Bernard? It's longer than that.
Yeah, it's longer than
Yeah.
40.
It's longer
so-
than that.
So being our relationship with our management group, we kind of hit two folds. Newport Hospitality has a great relationship with Hilton, and we have a great relationship with Marriott. So basically, in our contract, we have a 10-year hold, but I think we'll have it indefinite. They really like working with us.
And then I saw the other question about, sorry, I'm terrible with going through this chat. What happens if the minimum target amount is reached, but not the total amount of capital needed? So, one, a part of the reason for us having capital contributions is the general partners is to avoid touching any money raised for anything other than closing out financing to do the vertical construction. To answer your question, though, we'll have to get back to work and either find a group of investors willing to close that gap in funding or a big fish that's willing to close that gap and be prepared to potentially take a little more equity out of what we'd be retaining in doing that if it's, say, one person that's going to wipe out the gap that we have in equity. That's the most honest answer I can give you for sure.
And if it doesn't, then like I mentioned earlier, it's in the escrow account. So then the funds will be, if we have to do that, then the funds will be released. But we're going to think positive. And Avery, I feel like that the team has a plan to make sure it gets to the finish line. But if that does happen, of course, everything is risky. Then the funds will be sent back to the investors if we have to initiate a refund.
Thank you.
Thank you.
I think this is great.
Thanks, Ms. Chan.
Thank you so much.
Thank you all. Thank you all. Great job. So we'll get make sure we'll get the replay out. You'll see it within 24 hours. You should see the information. We're just still going through some compliance stuff. Once we finalize that, then we'll go ahead and update the information. At least you have the pitch deck to review. We'll go ahead and get the link out to you so that we can go ahead and start the investment process. We do have a relationship with Equity Trust. That's our strategic partner. There's some folks who do use their retirement to invest. So we have some information on that as well. So that usually takes about 30 days to set up. So yeah. All righty. So we'll see you all. Thank you so much for tuning in. It's the first day of May. So happy May to everyone and to all the May babies.
Thank you,
all.
everyone.
Thank you.
Hi, everybody.
Thank you,
all.
Bernard. Thank you, John.
Thank
And
you,
thank you,
guys.
Ricky. I think I got everyone.
Thank you.
Thank you.